What good, YouTube? How you guys doing? I hope you guys are having a wonderful day today. Welcome to another analysis. I've been out for quite some time because of you guys do not like the videos. So you demotivate me when you don't like the video. So make sure you click the like button and you subscribe if you haven't subscribed, so I can continue making this kind of content. I'll be doing some very good analysis, so I hope that you're gonna watch the video until the end and you're gonna get a lot of value. So let's out wasting your time, let's get into it. So the first pair I want to talk about is the Euro USD. Man, the last time we spoke about the Euro USD was the last time I created a video. So this setup is what I'm looking at, guys. So the reason why it decided to push up, I saw a lot of people talking about the up move, why it went up and all those stuff, because of this Quasimodo. Let me show you something. I want to show you something. So a lot of people had this in mind because of this Quasimodo here. So there's a shoulder and then there's a head. So they thought that the main reason it decided to went up was because of this demand here. So this demand, which I don't disagree or agree with, but I'm not really interested. But I know for the fact that whenever the market opens, you see this gap that it created here, it has to close this gap. This gap, I remember it was last week, this gap was created and then the market decided to close it going up. So I know that for the fact that when it open a gap, in most cases it have to close the gap. So this is the trade that I'm looking for. So this is the trade. If I look at it here, so if you look, I want to show you proper. So if you look here, the spike here, and then the spike here, and you just draw a horizontal line just exactly where the spike end, you see that this is a very significant level. This is a very significant level. You see the spike at the exact same point. So let me highlight them for you so you can see proper. So you have a spike here, there are spikes here, and then this is the spike that I'm looking for, that I'm looking at. So this is a very significant level of resistance. So there's a lot of orders being hidden here. There's a lot of stop loss. This is a high liquidity zone. This is a high liquidity zone. So there's a lot of stop loss I'm gonna stop some money. So let me just write it for you so you can not forget. So there's a lot of stop loss here. Stop loss. There's a lot of stop loss at this point. So there's a lot of stop loss going here. So I know that the market makers know that there's a lot of stop loss at this zone. There's a lot of stop loss. So they have to trigger these stops at this point because this is a high significant zone. So I know that the price have to come here and trigger those stop loss. So knowing the trader that I am, I'm always gonna look for the Quasimodo. So I'm looking for the Quasimodo. I'm gonna go for looking at my left hand side. Looking at your left hand side, always look at your left hand side for analysis, because history repeats itself. So this is the the setup I'm sharing with you. Remember this last setup I shared with the euro, we made a lot of money. Even on this gap, we made a lot of money on this gap. So this one is gonna make us even a lot of money. This one is even better. So this is what I'm looking at. So if you look here, you have a proper shoulder here. You see this is a nice shoulder, and then this is the entire head. This is entire head. So the structure was broken here. So this structure, let me just I want to delete here, sorry about that. So this structure was broken at this point. So this low was not equal to this low at this point. This low was not equal to this low at this point. So the structure was broken, showing that it's an overall downtrend. So this Quasimodo is at this exact point exactly. So even if you can enter here just to avoid the market leaving your orders. So this is where I'm expecting a huge sell, just on the left hand side of this Quasimodo. So if I highlight this here, so there's a lot of highlights, I'm sorry about that. So if I highlight this entire zone, Zooming in, zooming out a bit. Okay, it doesn't show proper. So if I highlight this entire zone, I know that the market have to have to have to take the stop loss here. You have to take the stop loss and then go on my left hand shoulder and go for a huge sell. This is gonna be a nice swing. So I'm expecting the price to do one thing right now. So let me just put it on the daily so we can see proper. I'm expecting the price to go up here and take all the stop loss, and then once it's taking all this stop loss here, it's gonna trap all the traders that are gonna enter here for a breakout. This is gonna be some sort of a breakout here. So a lot of traders are gonna expect a breakout here for when the price break this significant resistance. So a lot of people gonna either gonna go for a sell and go for a breakout. So after going here, we know that the price has to go here, this zone again. So this is a very, very good trade, guys. So you're gonna enter your position just on your left hand shoulder and then put your stop loss just above this zone. Your stop loss has to be here. So we're gonna hold this trade. I don't know how long it will take for it to actually reach this point, but it really doesn't matter how long it takes. What matters is we follow all the procedures and everything that says that the price has to go here again. So this is a very, very good sell on the USD. And if you're on the February group, I've already shared the setup. The setup is very, very, very good, guys. This setup. So right now I'm just waiting for the price to push up. So I don't know how long it will take to actually push up here and then decide to go down again. So it might take some time, it might take even quicker, but the important thing is I have to wait for it. But I know that it's gonna be worth the wait. Just not just that, if you can look here, this low and this low, it's already showing us some sort of a 3D approach. So this is the first touch, second touch, third touch. So the third touch has to be here. The third touch has to be here. So one, let me highlight it for you. So we have a lot of what you call confluential things that are saying that the price have to come at this zone. So let me just zoom it for you. So here, so we have 1, 2, 3. So I'm expecting the price to push and come here, and then I'm gonna go for a sell, and then I'm gonna go for a sell and expecting to close it here for a take profit. It's going to be a very good swing trade, very nice trade. This is a very, very, very good trade, but it might fail, but it's unlikely. So don't forget, I'm not a financial advisor. I'm just doing this for educational purposes. So another setup that I'm looking at, there's a lot of yenas showing a lot of sell, a lot of yenas showing a lot of sell. So let's start with the pound yena. We had this set up on the group as well. So if you look here, we had the sell. The reason why I had the sell was obviously based on the Quasimodo. So we had this shoulder here, and then we have the entire head. So this was the shoulder, and then this was the entire head. And then you see this low was not longer equal to this low, showing that the structure already has been broken, proving that this is a downtrend. And then I expected the price to actually drop at this point. You see at this point, you see it respected exactly, and then it decided to drop. So if I highlight this entire zone, this is where the price I expected it to drop. So it's already showing some sales. So I'm expecting the price to actually hit this lowest low, and then hit my take profits. Then I'm done. So if it hits here, I'll be done as well. You see, if the price hits here, you'll take profit. So I'm expecting the price to go further down and hits my take profit. So already we're cruising on profits on this trade as well, because it was shared on the group. Then I had this another trade, was the CHF Yen. This one was very easy. If you look at this one, it was a lot of confluence of the price testing a significant zone. So I knew that on the based drop, the price might drop again. So if you look here, I wanna push this thing up. So if you look at this zone, these spikes here already showed us there's something happening here. So I just draw a horizontal zone. Let me just draw it here. Let me push it up a bit. So I already have a lot of confluence on some lot of spike. You see how many times the price has tested here? 1, 2, 3, 4, 5, and then this was the base candle here. So the drop, base drop. So I knew that when the price has broken this part already, is gonna try and retest. So it went up and retest and then decided to drop. As much as it wasn't a very good entry point, because if I highlight it here, you'll see that this is not a very good entry point, but it decided to respect and then it has gone down. So let's just go for some other trades that probably has some good. This one is very tricky. This one, the AUD yen, this one, I saw this significant zone here. So if you can see this significant zone at this point, let me show you, let me drop it up. So you can see here, this was a very significant zone. So the only way you can actually define the significant zone, guys, is always look at your spikes. So you see there's a spike here, then some spike at this point, there's a lot of spike, and then obviously the base candle is always going to give you the conclusion of the clue. So I saw this and then I knew, okay, at this zone probably it will hold here. But my biggest worry was the Quasimodo above. So this was very give me anxiety, because of, you see this point, you have a shoulder here and then you have a head, and then the structure was broken here. So the price might go this point, and then you see when it goes to this point, there is a nice drop, base drop here. You see there's a nice drop base. So this is a nice Quasimodo. So there's a shoulder and then there's a head. So if the price decides to break this significant level here, it's gonna go up at this point and then decide to drop here. So that was my biggest worry. So I might just ignore this trade and just wait for this one. And if you can see, there is a 3D here showing that the price will do that. So this the first, so you have first touch and the second touch. Okay, let me just highlight for you. So you have this touch here, you have this touch here, you have another touch at this point, you have another touch at this point. So we're expecting a third touch now. So this just draw here, you see this is gonna be the third touch. So the 3D is expected, so that's why I ignored that one. So the third touch might be here. So this is 1, 2, 3. 1, 2, 3. This is the third touch. I'm expecting the price to go here, and then obviously your take profits have to be at the lowest low at this point. So this is a very good trade. Remember, guys, I want to tell you something. The mistake I also did as well is that whenever I'm highlighting this zone, this is my entry point. You don't always have to put your stop loss on the base candle just here. Don't put your stop loss here. Put your stop loss above the head. That's the theory, not here but here, because the price might move above this, because there's a lot of manipulation that happens on the base candle. So the price might break this base and then respect the Quasimodo. So obviously all your stop loss have to be here, because one of my biggest issue or problem that I usually do when I know that the price might go here, and I know that the stop loss is obviously gonna be tight, I'm gonna use huge lot size. So I'm gonna overledge my account, and then not knowing that they're gonna manipulate the base, triggering my stop loss, and then the trade will go on the right direction. So like this trade I actually had, there's a trade that I posted on the group that took me out and then went on profit because of that mistake. And then unfortunately you have to learn the hard way in forex. This trade here, this was the trade that I had. So I had this Quasimodo here, I had a shoulder here, then I have a head, and then I had this base. This base was this base. I saw this base. Okay, this was a significant base, and then I highlighted this entire zone. You see this entire zone, and then I used a huge lot size, not knowing they'll manipulate the base. You see they've manipulated the base and then they've respected the price. You see it went down, so I'm already triggered out with a huge loss, and then now the price is respecting. So please don't do that as well. So whenever I'm highlighting with the yellow zone, know that your stop loss just have to be above, like, guys. above here. So please like the video, guys. Make sure you like the video and you subscribe. I really appreciate that. So let's just go to the gold. The gold is, I don't know what is happening on the gold. I saw the sell, so nothing much is happening on the gold. No good trade yet. It failed to actually break this high, this previous high here. You know that is always gonna respect the first high for the first time. It's not just gonna bull unless there's a huge event. But obviously, I don't want to talk much about the gold right now, but I've said that so many times that the gold is on an uptrend, so we're always going to be looking for buying moves, buying setups and all those trades. Let me just see what else am I missing out. I've told the Euro USD. The Euro USD is very important. What else? This one I remember, NZD USD. This one, I saw this one on the daily time frame. Let me see. Okay, this on the weekly, but it's still very far lah. So we have this one here. You see, whenever I'm looking at the spike, I'm looking at the base as well. So let me just draw it here. So we're expecting, let me zoom in so you can see proper. So you see, you will see the price respected so many times now. Okay, 1, 2, 3, 4, 5, and the night base. So whenever it's ifike, I know I'm gonna go for a huge sell at this zone. I'm gonna go for a huge sell. If it wants to come here, so if it push and it's come here, let me show you. It's push. It has to push up a bit and then decide to drop. So this is gonna be a trade that I'm looking for here. I'm looking at right now. So right now that's the entry point jam. So once you figure that, ngizobe sengile nto le sengiya for usell, and then stop loss ngizosibeka nje just isiphefumule la, ngisibeke la above la, ngisayibona ukuthi le level siteste kanganani, yabo. So it's a very significant level. So that's what I'm looking at. So make sure you subscribe and you like the video. So bye for now.